Hello and welcome. This is the Market Wrap. I am Agam Vakil. Well, it is the sixth straight day of losses and the longest losing streak in over 2 months for the Nifty, with another 19-point decline. And even though the losses have not been as significant as yesterday, the most important thing is that we still saw the Nifty close below 11,250. Now, we've had a fair share, or the Nifty's had a fair share of losses, but I'm going to start with gainers in Vedanta, Cipla and Zee Entertainment, all gaining more than 3%, followed by Sun Pharma, Innocent Bank and Dr. Reddy's. But on the losing end, it is Tata Motors awaiting earnings, so we'll be watching out for that. Bajaj Finance, while the earnings may have been, well, so I'm going to crock earnings in just a bit, but we do have weakness in both Bajaj Finance and Finserv. Coal India, GSW Steel and BPCL all declining in trade. The advanced decline ratio is not as bad as yesterday, but it's not improved tremendously. We do have more losers in compared to gainers. Kaplan Point, however, along with Shriram Transport Finance and Kirloskar Oil and Varun Beverages advancing in trade today, along with Dr. Dalal Path Labs also advancing 6%. But on the losing end, we have something like a Future Consumer, GET&D, IFB Industries, Praj Industries, Care Ratings, all declining in trade. And as you can see, the momentum for the losers a little more than those which have advanced in trade. On that note, I'm going to get in our markets editor, Neeraj Shah, for his thoughts on the markets. Hi Neeraj, what are you making of today's move?
Well, interesting day of trade yet again. I mean, 2 days on the trot, we've been talking about how the markets start off high but end off lower.
Yeah.
The only comforting thing, Agam, to my mind is that we're now holding on to that 11,250, 11,300 back, right? And which is what all technical experts seem to be suggesting is a place from where we can move up in trade. The question is, it's probably just a bounce and nothing else, because if you heard the commentary from Bajaj Finance as well, not negative, but certainly not exuberant. So if the best in the business are getting worried, then you've got to probably ask yourself, or not worried, but sounding cautious. Let me rephrase myself. He did not sound worried at all. I rephrased when he spoke to us. And I'm sure Shefali will talk about that as well.
Yeah.
So I won't dwell too much on it. But if that is indeed the case, then fundamentally, is there a case for some more downside? That is one. Part two, I think your viewers might be interested also knowing, Agam, that the bond yields reacted quite strongly towards the close of trade because of the commentary going in the social media circles about whether or not the sovereign dollar bond issue might be scrapped. And if that is indeed the case, then there could be some pressure on the yields, which might have a pressure on the rupee and the markets as well. So that's the other factor you need to monitor, because the 10-year yield certainly shot up or moved up in the last half an hour or 40 minutes of trade from 6.44 to about 6.54 before settling in about 6.50 when we shut shop. So do monitor that very, very closely.
Yes, absolutely. And economists especially will be keeping an eye on that one. But Neeraj, thanks for that perspective out there. But let's talk about Bajaj Finance. Then we have Shefali, as promised, who's going to give us a fine print of the numbers. Shefali, how did the numbers look like? And more importantly, what was the management's body language like?
Well, first, the numbers were largely in line with the expectations. The gross NPAs went up slightly to about 1.6% versus 1.54% on a sequential basis. There were some slippages on account of IL&FS. If you exclude that, the asset quality was fine. But more importantly, as part of the presentation, management mentioned a few comments which were basically that as a prudent measure, they are tightening their underwriting practices, which means that while giving loans, they would be more stringent. So basically, because of that, they've seen disbursements drop in the digital product financing segment by about 15 to 18 odd %, and in SME and B2C loans about 10 to 12 odd %. So that's the impact that they saw. And in the interview, the management said that yes, there is a slowdown when it comes to discretionary spending, and if required in the current requirement, if required, they will indeed go slow. But despite that, they are still targeting an AUM's of about AUM's growth of about 25 to 27 odd %. And so yes, cautious but still confident. That's how I would describe it.
Okay, fair enough, Shefali. Thanks for getting us those details, as well as what the management had to tell us when we spoke to them. But let's move on and talk about two other stocks which were also in focus, and we have Sharad Dubey as usual, who's joining us to give us an update on the same. Sharad?
Yes, I think earnings specific, we take the first one being ICICI Pru Life Insurance. The stock was up by almost 6%, and if we go through the numbers, the gross premiums were up by almost 14% to around 6,300 odd crore rupees, and the new business up 26%. And the VNB margins is something which I would like to talk about, that rose up by almost 400 points. Now let's see what happened in the charts today. You see the ICICI Pru Insurance, the stock, after the results came over, the stock increased, and increased as high as almost 7% and closed the day at around 396 per share. The management also clarified that the call in its call that they are not averse to writing of long-term pension and annuity businesses, but in seeing the current situation and the hedge positions, they wouldn't mind taking this balance sheet risk. And one more thing which we need to talk about is the re-engineered business model, which will actually improve the product mix, and also going forward it will also go to increase the protection mix. The second stock I would like to talk about is Kaplan Point Lab, which was up almost 11%, seeing its biggest gain in almost 2 years after the company received an establishment inspection report for its facility by the US FDA. Now mind you, this inspection was completed on June 2019. And the third stock, it is earnings specific, is Ambuja Cement, which came out with its number, but there was a volume growth miss. Now if you see the stock reaction today, what has happened is the stock was trading in a consolidated phase between the 217 to 220, but then it fell and ended the day at around 214. Now going through the numbers, we see the revenues was down almost 1%. It's a slight miss in estimates, but the EBITDA was down almost 12% at 698 crore rupees, with an estimate which was estimated at around 595 odd crore rupees, and the margins were also at around 23.4% and 20.6%. But something which I would like to point out is the sales volume, which the estimate was around 6.1 million ton, but it came at around 5.8 million ton versus 6.3 million ton on a year-on-year basis. So Agam, these three stocks are actually buzzing in the mid-cap space, and these two stocks which we have talked through the charts via the earnings.
Right, fair enough. Sharad, thank you so much for getting us those details on some of the other stocks which are in focus. We'll be watching out for that, as well as, of course, several other earnings which are due this coming week. So we'll be watching out for those as well. And on that note, it's a wrap on the markets, but lots more lined up. Stay tuned to Bloomberg.